Bitcoin is reshaping corporate finance, and market leaders are already making their move. Strategy World 2025's Bitcoin for Corporations event is where top executives learn how to integrate Bitcoin into their business strategy. You missed the early discounts, but you can still get 20% off when you use code BIZBIT at checkout. The companies that will win in the future are the ones positioning with Bitcoin now. Sign up today using the link in the show notes. Welcome to the Bitcoin Playbook, where we discuss proven strategies for using Bitcoin in your business. I'm your host, Josh Friedman, and this week we have a roundup episode with Trey Sellers and Jon Gordon, where we discuss tariffs, the Triffin Dilemma, and running for Hal. We're going to get to that conversation right after this. Business owners, unlock the benefits Bitcoin has to offer your business with the Bitcoin for Business Quick Start Guide. This 27-page guide highlights the 6 ways you can grow your business with Bitcoin. Check it out in the show notes. Jon, Trey, welcome back. We have another roundup episode this week. There's been a lot that's happened, not as much in the Bitcoin and business world, but certainly with tariffs. So let's kick off the conversation today, talking a little bit about tariffs and how Bitcoin has been holding up during that time. Jon, let's start off with you. Thoughts on the last week in the market?
Yeah, it's certainly been interesting. I think a lot of the TradFi investors are getting a taste of what it's like to be a Bitcoiner, where we're used to this kind of volatility, but to see 10% plus intraday moves in the NASDAQ and S&P is certainly something that more legacy investors are not used to seeing or stomaching. And clearly we're seeing what's happening with markets built on a fiat standard, and where Truth Social or Post or X Post can really send markets spinning in different directions. I think it just highlights the changing monetary order that we're seeing right now, and that a lot of the economy built on not sound money is kind of teetering, and there's moves back into gold, with gold hitting all-time highs. Bitcoin, there was a lot of talk of decoupling, and for a couple days there, really was holding up well over 80K, saw a bit of a dip. Now we're back. It doesn't phase us, I think, as Bitcoiners, but we're seeing, I think, the markets start to get more educated that Bitcoin is separate from just another stock. It is not NASDAQ, or it's not S&P. It's really sound money. And as more nation states, individuals, and companies wake up to that, I think we're going to see that continued decoupling and resilience, no matter what tariff or other external kind of policy order comes into place. Because Bitcoin is 24/7, it's purely digital. It's not impacted, at least for now, by any of that legislation. And we're still seeing executive orders for Bitcoin to be accumulated in a budget neutral way. And that's still yet to be fully rolled out. So certainly entertaining, no dull moment. But as a Bitcoiner, it's kind of, we can watch with a bit of a perspective from the sidelines too, and see it as the fastest horse to pick back up as soon as, the sentiment shifted. I don't know, what are your thoughts, Trey?
Mm-hmm. Yeah, the decoupling narrative was really interesting, mainly because it was very focused on like a single day. Hey, is this the day where we've been decoupling? And actually, if you look back at the performance of the NASDAQ over the last maybe 3, 4, 5 months, something like that, versus Bitcoin has been much stronger, right? We are still up substantially, whereas the NASDAQ is down pretty substantially. That sell-off from the top was just absolutely crazy in the stock market, and the NASDAQ leading the way as the Mag 7 stocks have been just sold very, very hard. I mean, these are stocks that are owned across the world internationally. People seem to be just fleeing dollar assets of all stripes, right? They're selling bonds and yields are going higher. They're selling the dollar. You can see the DXY fall. They're selling stocks and other, US based assets like that as well. It's just been kind of crazy. And you expect that Bitcoin is going to follow that trend to some degree. And really you would expect it to go like much, much lower. I think people probably were we should have been down maybe in the 50s or 60s or something like that. And we couldn't really break below 77,000 or whatever the low actually was. So I think the relative strength of Bitcoin was actually very, very meaningful. And, gold has certainly been leading the way as this like non-sovereign asset that maybe international investors are fleeing the dollar and going into because they're trying to get away from the kind of the juxtaposition that they are in terms of the Triffin Dilemma. And we can go into exactly what that all means, because that was a very popular topic over the last couple of weeks. But I think that the outperformance in Bitcoin relative to expectations is pretty notable, and we'll have to see what happens over the next few months to see if that actually continues and we start seeing it outperform or be meaningfully disconnected from the rest of the market as it goes on the way up. That's kind of my base case at this point, but we'll have to see what actually plays out.
So you've just written a piece on the Triffin Dilemma. Bitcoiners will have heard of the term. They may or may not be familiar with it, but I feel like the general public probably has never heard it before. So I do want to ask you about that in just a second. One quick thought that I had, though, is when it comes to Bitcoin, first of all, John, you said it's, we're used to crazy price swings. I think it's interesting that the S&P 500 has been trading less time than Bitcoin has. Even though Bitcoin has not been around for nearly as long as 24/7, 365. I almost wonder if there is some element where Bitcoiners almost learn faster than people in the market. That may not be fair, but we definitely experience a lot more life, just like in a week of holding Bitcoin as opposed to a week of holding the S&P 500. Do you guys have any thoughts there?
There's certainly a lot more time watching the charts and seeing price movement than the traditional financial world is used to, right? Like, Wall Street is very much used to coming into work and the market opens at 9:30 a.m. Eastern time and it closes at 4, and it does that Monday through Friday. And all of those other hours, the other like 75% of the week, the market is closed. And so you get these weird like gapping type structures and prices as news events are hitting overnight or over the weekend. And then you get this like backfilling as, those other prices haven't been tested. Bitcoin doesn't really have that. It's just a continuous stream of signal going out to the world. And because it is so widely traded, we talked about this the last time, that Bitcoin is very decentralized in the way that it trades as well. It's traded across the world and thousands of different exchanges. And that allows it to act as a signal of liquidity and a measuring stick for the impact of various macroeconomic issues or questions or events that are happening. Because if you need to trade something, you need to express a view and you need to do it immediately. Bitcoin's the only thing that's open. You can't go to the stock market. You can't go to the bond market on the weekends. Like futures markets are open much more than the actual spot stock market is, but it's still like fairly illiquid or whatever. Bitcoin is just there as this constant measuring stick. Constant in two ways. One, that it's always there to be a tool for measuring, and constant in that the size of the stick doesn't change, right? You don't have variability in the amount of supply that's out there. So it's really interesting to watch the development of how Bitcoin reacts to the macroeconomic news as it becomes accepted as a macroeconomic asset and something that is a key part of the landscape of how people are allocating to assets, whether they're taking a bullish versus bearish view, and how central banks and governments and major institutions and allocators are trying to discount the future of what the economy looks like.
Yeah. John, do you have any thoughts? I know it's not a very fully formed idea, but I think there is something to the fact that there's, to a lot of people, Bitcoin is the Wild West, and there's a lot of crazy business practices or questionable things people have done that have made the price move really quickly in, the last 4 or 5 years. Is there some sense in which Bitcoiners learn faster because it's an always open market?
Yeah, absolutely. And I think also Bitcoiners find safety in sats, as many like to say. We know that there will only be 21 million Bitcoin. And if you're holding your Bitcoin in cold storage, you have custody of that asset versus a lot of the other assets here we're talking about that are traded only in this closed certain set of windows, quarter of the week, whether it be stocks or bonds. They're layered in IOUs, and the ability to actually draw on that liquidity is incredibly varied and comes with many permissions. So when it's certainly interesting to see that reaction on a Sunday night when there's some negative news and doomsday is being called after the worst Thursday, Friday, and now we're coming into Monday thinking everything's going to break, and then at the end of the day it was sort of even. It was pretty wild to see that type of reaction. So yeah, I think Bitcoiners certainly have picked up on it, and then also recognizing that a lot of the volatility or perceived volatility in Bitcoin is just in that USD price. Right, we know what the issuance of Bitcoin is going to be. There's 3.125 Bitcoin every 10 minutes, and we're seeing more solo miners even get their hands on some of the Coinbase rewards. But when everything else is kind of falling apart or has that semblance of really fear in the marketplace, that if you're holding your keys, your Bitcoin is there, and it comes with other people learning and being educated and valuing that quality of Bitcoin. So certainly Bitcoiners are learning, I think, faster, but also have the conviction to not get too down if even the price dips temporarily on a Sunday night because, people have bills to pay or other liquidity issues, that this is just the asset they can get their hands on the easiest and quickest, no matter where in the world they are.
Yeah, you're talking about the impacts of tariffs and all of this stuff in a different way, and like the Bitcoin miners are very significantly impacted, or at least were before some of these carve outs and exceptions that were happening. And there was a little bit of a panic you could see in people just scrambling to try to get orders in from China or wherever they're sourcing their machines, their infrastructure for building out their mining operations. And so it remains to be seen how all of this is going to play out, of course. But there's two points I want to highlight here. One is that if the tariffs on China apply to mining operations or the equipment and machinery and all that the mining operations need, it's going to significantly pressure them in terms of their cost and their operations cost, making them much less profitable. And that could potentially lead to, drops in hash rate and that kind of thing over a longer period of time. That's definitely something to watch in terms of what could play out. But the other thing that I found very interesting is that hash rate has reached brand new all-time highs, basically every week. We just crossed, I think it's a zeta hash threshold there. And it made me think and wonder, is it possible that there are some nation state type actors who are less driven by, they care less about profit and margin and more about a scramble to just, get mining operations up and running and get this, these sats flowing into their coffers in a permissionless way? They're less sensitive to the price and they're less sensitive to profit. And so maybe what we're seeing in this relentless push of hash rate, over the last few weeks and months is these major nation state type economic actors coming into the space. I wonder if you guys have any thoughts or seeing things in similar light.
I've certainly wondered about that. It's incredible to see the hash rate continue to rise. And, even if you go to the mempool, you'll see that the depth of the mempool, the transactions waiting from time to time is pretty thin. So you'd think that miners would be capitulating, but you've seen the hash rate continue to increase. So it does seem like there's someone out there who either has a lot of cash on their balance sheet so they can wait out whatever difficulties there are right now, or to your point, there's a nation state out there. And I don't know that it's quite like the Jason Lowry soft war thesis, because that's more ensuring that you have hash power to so that you can process transactions between your country and allies, for instance. But I do think that countries are probably positioning themselves now, and is probably the very beginning, the early days of that thesis starting to play out, at least in one way or another.
Yeah, I mean, seeing a 6.8% difficulty adjustment last week, 9 days ago, upwards at already this baseline of hash rate is truly remarkable. I mean, that's really even more than the price, the indicator that I think Bitcoiners really follow and should be looking at most closely, because that's the security of the network. That's the tie to the physical world, is the amount of energy that's going into mining Bitcoin and trying to not only secure the next block, but as you said, as a sovereign nation state, be able to fully participate in the network and send their transactions and be sovereign. I think we saw some inklings of China and Russia settling some energy trades, via Bitcoin between themselves. So as there's a shift more out of the dollar and into Bitcoin, taking that playbook out of even countries like Bhutan that have been mining kind of quietly. They sort of got doxxed through the Celsius and other proceedings, but now have shown, hey, here's our beautiful airport that we're designing with our proceeds from Bitcoin mining, and that tie as well from sound money and sound architecture. There's countries that have quite a bit of energy infrastructure that they control and that they can redirect towards activities that they want. So I definitely agree with that sentiment, Trey, that they're less concerned on immediate profit gain or loss and more around, okay, let's set up our infrastructure, let's connect to our geothermal we have volcanoes like El Salvador, or our excess hydropower if you're in Paraguay, or if solar power if you're in Africa. Whatever your source of energy is going to be the cheapest, and where you have the most excess, or where you have the most waste, or where there's a ton of energy production but difficult to transport to the people. Now you can bring Bitcoin mining to it and have this 24/7 buyer of energy. And so I think that as the Bitcoin mining ecosystem has continued to mature and develop over the last few years, nation states, Middle East as well, as we're seeing, are definitely waking up to that. And if you have a bunch of oil too, right? Obviously that's an easy one, natural gas. So as long as we see the hash rate continue to increase, to your point as well, Trey, the ASIC discussion, and maybe we can get into the Triffin Dilemma here, because the centralization though of the chip production to this point in China and a lot of the ASICs being built there definitely impacts the supply chain and the immediate ability to convert that excess energy into hashes, just with the physical limitation of the amount of ASICs you can build. But there isn't necessarily, because of the open source nature, you don't need to rely on that, but certainly the industry to this point, maybe could be a source of, if we've seen also with the pools, a source of centralization, where we're going to continue to see more decentralization as countries build up their own supply chains and realize how important it is to get some KYC free sats on themselves.
Yeah, if you're a nation state that's maybe adversarial with the United States, and you're looking at the current global hegemon, or the current superpower in the world, throwing out so much volatility in terms of what to expect over the last few years, right? This isn't just the last week or two, or since January, since Trump's second term started. It goes back to the SWIFT system and cutting Russia off from that, which really was a shot across the bow for any and all other countries out there who are thinking, okay, well, I need to be thinking about how I can, still survive and thrive in the world if I were to be completely cut off from the global financial system that is run and controlled by the US. And Bitcoin provides a way to do that if you're able to just plug your energy assets into the network and receive sats for that energy that you're expending. Now, all of a sudden, you've got an asset that nobody can stop you from spending or using for global trade, and you don't have to rely on the dollar system as much. So it's that game theory playing out that we're starting to see. And when the Trump administration comes out and just kind of shoots at the heart of the global financial system and the way that it works by putting in these massive tariffs, especially against China, who's kind of at this point seeming like the biggest economic rival that we have to the US, you're going to start seeing people jockeying for position on alternative plans of actions. All right, plan B, not to make a pun of it here, but now we're starting to see people start thinking about their planned Bitcoin, I think.
Yep. Yeah. I think that there's a lot of moves being made right now by nation states and many others, but especially nation states. And in a few years, we'll find out what those were. But
they're at least having the conversations internally, right? I mean, it's happening in the US. Who knows what's happening behind closed doors in some of these other countries? In China, for sure. In Russia, for sure. In, Vietnam now, who knows, right? Because the U.S. just came out and tariffed them as well as a proxy to China in the way that they're trying to go around, certain tariffs and that kind of thing. So everybody's got that on the tip of their tongue.
You have the first one to go public, and then you have the first one to actually make the move. I'm very curious to know who the first one actually making the move is at a large scale, the first superpower. I don't know who that will be. I hope that it's the United States, but only time will tell. So Trey, you also have this new article on your Fire BTC Substack about the Triffin Dilemma. So please educate us about what the Triffin Dilemma is and how it connects to tariffs.
Yeah, the Triffin Dilemma is really connected to the way that the global monetary system works and the fact that because a nation state like the US, if that nation state has...
If you were hit by a bus right now, could your family access your Bitcoin? When's the right time to stop hodling and use Bitcoin to impact your family's lives, not just yours? What if Bitcoin doesn't reach the value you expect, or it takes longer to reach that value? Do you have a plan? Do you have the proper trust structure to avoid probate, maintain your privacy, and minimize taxes? Do you want to avoid taxes to stack more sats or leverage your stack without selling? Should you add Bitcoin to your business's balance sheet? Are you truly confident in your self-custody setup? If any of those questions made you stop and think, you probably realize that simply buying and holding Bitcoin is not a complete financial plan. That's where Strong Wealth comes in. Orange-pilled advisors blending traditional financial planning with deep Bitcoin expertise, giving you the best of both worlds, so you can sleep peacefully knowing you're making the right moves for your family no matter what happens. Schedule a free call at strongwealth.net. That's strongwealth.net. Strong Wealth. Wealth management for Bitcoiners by Bitcoiners. Today's episode of Business Bitcoinization is proudly brought to you by Velis Commerce, where the future of business technology meets Bitcoin. As we journey through the era of Bitcoin and its transformational impact on businesses, there's one name that stands out: Velis Commerce. Whether you're looking to build a cutting-edge website, a seamless mobile app, or custom software, Velis is your go-to team. They've been diving deep into the world of Bitcoin since 2014, making them one of the most experienced groups for integrating Bitcoin and Lightning payments into a variety of digital platforms. But here's what truly sets them apart. Velis Commerce doesn't just build. They bring a wealth of knowledge to ensure your project's success from day one. Their team understands the nuances of Bitcoin, ensuring that your business stays ahead of the curve. And for all business Bitcoinization listeners out there, Velis Commerce is offering a free consultation to kickstart your project the right way. So if you're ready to future-proof your business in the coming age of hyper-Bitcoinization, head over to veliscommerce.com or reach out on Twitter at veliscommerce. Let's make sure your business thrives in the Bitcoin era.
The global reserve currency, it's going to create an excess amount of demand for that currency because other places around the world, whether they're corporations, whether they're governments, whether they're central banks, they need dollars in this case because the dollar is the world reserve currency. They need those dollars to settle trade. Oil is a very obvious and famous commodity that is traded in dollars. A famous deal back in the 70s with Saudi Arabia that kind of like really put the US dollar at the center of global trade. And so if you need to buy oil, you need to get dollars. That puts a perpetual bid under the dollar market. It makes it stronger relative to other foreign national currencies. And if you have a stronger dollar, that means imports are going to be cheaper relative to exports. And if imports are cheaper relative to exports, you have a natural incentive to import more goods, thereby supplying dollars as you're paying for those goods out to the rest of the world. And they happen to need those dollars. Again, we just talked about this demand. They need those dollars to settle trade, to settle dollar-denominated debt or pay that debt down or make interest payments on it. It also, though, encourages the manufacturing base, the productive capacity of the US to move abroad to cheaper places because, again, it's cheaper to import than it is to produce it at home. So what Trump and the administration has been complaining about or really going after is saying, hey, we want to bring the manufacturing base back to America. We don't want to rely on China or any of these other countries for production of all of these goods and services, especially the ones that are critical to national security, right? And but here's where the paradox is. If you go after this trade deficit, which is created by the imbalance of imports versus exports that we were talking about, if you shrink that or eliminate it, now all of a sudden the primary mechanism for the rest of the world getting access to dollars, which only the US can print, the primary mechanism for that flow of dollars to the rest of the world gets shut off. And so you have one of two things that can come from that. The first thing is there's nothing to make up for it. And so you start getting a liquidity crunch. People still need these dollars. The demand doesn't magically go away. So now you've got the same amount of demand facing much fewer dollars floating around out there in the global economy, and the dollar value spikes, and now it makes it even harder to pay back debt, and people just start going bankrupt, essentially, right? You get this liquidity crunch, and markets and economic trade basically grind to a halt, and you just see chaos in the markets. And we got a little taste of that last week when these tariffs were announced. You just saw like craziness in the market because the implication is that the dollar is going to strengthen, that we're going to choke off liquidity from the rest of the world. The alternative to that, if you don't want to deal with the entire world economy collapsing under its own weight, is you've got to make up for that dollar liquidity in some other way. Well, how do you do that? You either run much larger deficits than we're already running in the US, which goes completely against what Doge has been trying to accomplish by shrinking the deficit, or you have the Fed bring in QE to backstop some liquidity within the financial system, or you make checks out to people that in the same fashion that we did in COVID, where you're just doing like direct economic stimulus into people's bank accounts, or you do some combination of all of those three. Either way, you have to feed the beast. You have to feed the dollar liquidity beast. If you don't, the whole thing collapses. So this is the essence of the Triffin Dilemma, is that if a nation state's currency, if the dollar is to remain the global reserve currency, then we must run a trade deficit. We must run fiscal deficits in order to satisfy the excess demand that is coming from the rest of the world needing to have dollars to settle trade and debts. And we get a lot of benefit from actually having this. I mean, we get to print money. Nobody else can do this, right? America gets to print money for real goods and services that other people are like having to, sweat and actually produce in the real world. We just get to conjure up money to send over there. It's a really nice position to be in, but it does hollow out your industrial base, and it does leave you reliant on these trading partners. And so now you've got this like economic stalemate, because China is sitting on a hoard of US Treasury bonds and notes that they have been investing their excess dollars into. Now they're sitting on these reserves, and it puts them in a position where they've got now this weapon where they could sell down treasuries in order to put pressure on the US in a lot of other different ways. So this dynamic is something that there's no real easy way out. Right? You either need to just print your way through it and hope for the best, or you need to transition into something that's neutral, something that's not tied to a national currency. Obviously, we think here on this call that we're moving in that direction toward Bitcoin, and Bitcoin will is ultimately in a position to take on that role as a neutral reserve asset and a neutral reserve currency for the world. But it's not going to be a smooth transition. It's definitely going to be volatile. And it's going to be very interesting to see all the different dynamics at play as China versus Russia versus the US and the Trump administration and the Fed and the Treasury all come together. It's like that that Spider-Man meme. Like it's the prime example of that meme, right? Where they're all sitting in the circle and pointing at each other. That's the overview of the Triffin Dilemma. Hopefully that made a little bit of sense.
It does. And John, I don't know if you have any additional thoughts.
Yeah, thanks so much for that. Overview, Trey. I think was really clear and really explains to our listeners here how important this dilemma really is. And if you study history, you know that this isn't the first time this has happened, right? We've had a cycle of around 80 to 100 years of other world reserve currencies, typically around the most powerful nation in the earth at the time and the biggest producers starting out, whether it's from the Spanish to the Dutch to the French to the British to the US. And typically around those transition periods is when it got to a point, as you're explaining here, that the sort of thin air money printing, or previously coin clipping or a debasement or just paper money beyond the gold reserves, becomes unsustainable. And everyone else kind of calls you out on the bluff of, you are creating something out of nothing, which goes against the natural order of our world. And at some point, the chicken's going to come to roost, and we need to have an alternative and another system that we can continue to operate and function and continue to enjoy the fruits of everybody's labor and all of the globalized world and this interconnectedness that we have, and being able to travel and explore different cultures and connect. And all we need is Wi-Fi, and we can continue to, be productive in the world. We're seeing that it was developed, in many ways recently, still under fiat, but a lot of the basis of our technology was actually developed mostly on the gold standard, whether it was, in the end of the 19th century around electricity and phones and wiring and everything that we're using today. And Nick Bhatia explains this really well in his book, Bitcoin Age, and just how the internet was developed in different open source protocols. And as we move into this Bitcoin age now, we're seeing the over-reliance that the United States has, with over 330 million people and many different needs and desires, on being and having to import so many goods across so many different sectors and services. And I would just love to share one story from my background in the healthcare industry, where 5 years ago now I was managing medical supplies, and we were getting all of our gauzes from China. Right? This is a commodity. You think this is cotton gauze, or it's rayon, or it's polyester, whatever it's made out of. Here, none of it is made in the US. It's all made in China. And then I was exploring and saying, where could we even get this product that's spun out of cotton? Okay, there's one producer in Portugal now, and we'll go chat with you guys. And maybe someone can do it in Mexico. And you're evaluating, and what are the costs going to be to go and source these products, because consumers in the US, or these huge hospitals and health systems, are used to a certain price. And that price has been driven down to an extent through this dilemma, but through the outsourcing and cheaper labor and electricity costs. So as you're evaluating reshoring that industry, and whether that's PPE, as we saw during the pandemic, and we realized, we don't have our gowns and masks, and certain more critical goods have, since COVID, certainly come in the process of moving onshore already. But those products that are a little more on the margins, or didn't make sense from a cost perspective, and maybe aren't considered as critical, haven't moved over, and certainly have you can't just change those supply chains overnight. Right. And so I think this understanding now, and the push to move more building and manufacturing here is great in theory, and would love to see it happen. But in reality, it's going to take time. It's going to take a reshifting of business priorities, and investing back into, Americans and American, more blue collar working class of how are we going to build this stuff here? Because if we haven't made this stuff in 30 years, and since the 90s especially, we saw an acceleration of outsourcing, particularly in the medical industry, medical supply industry, but of course even others as well. Do we have the expertise and the technical capabilities to even build and manufacture at a level that we know we need? And of course, there are certain companies operating at a high level here in the US. We think we can do that, but the supply chains are very deeply interwoven into other countries as well.
Yeah, what I would like to see, instead of making imports more expensive for Americans, or making exports for other countries more expensive to bring things into the US, I would like to see us make production more cost effective by lowering the barriers, bureaucratic, legal, and otherwise, that people have to actually invest in the U.S. in productive capacity in the U.S. You know, you've got minimum wage laws, you've got like all kinds of protection type things that really just serve to pad people's payroll from a bureaucratic standpoint. They're not actually helping anybody. They're just standing in the way of us actually providing like real productive growth in the United States at a competitive rate, such that that economic incentive of going offshore to bring stuff in is lessened and maybe eliminated. Again, you're still fighting an uphill battle, though, right? Because of this excess demand for the U.S. dollar. It's always going to be there, unless and until something drastically changes with the monetary system for the U.S. and people start to say, okay, we actually do want to move away from the U.S. dollar.
So Trey, I'm curious to know what you think is the best course of action for the government right now. People have talked about Bretton Woods 2.0 or maybe the Mar-a-Lago Accords. Does it have to be an agreement around the world as to some sort of new order or approach to trade and business? Or do you see a more likely other alternative, such as just continuing to print and hope that everything's okay?
See, the thing with economics is that there's always a cost to everything, and there's always a trade-off to everything. And you can't, like, eventually the chickens come home to roost, as they say. There's no way to avoid the pain that needs to come with some type of restructuring. And the question that everybody's trying to answer and figure out, and the positioning that everybody's trying to work around, is who is going to take that economic pain, and to what extent? How is this going to be like levied out around the world? And obviously, everybody is like, well, not me. I don't want to take it. I don't want my citizens to take it. Governments kind of work against the interests of their citizens. They'd much rather their citizens take the brunt, but the citizens obviously don't want to take the brunt. And so there's political risk there. Each country is pitted against each other and saying, well, we don't want to take the losses here. You know what I mean? So unfortunately, there's no easy answer to that. If there were an easy answer, it would kind of, be a non-issue. Like it's a dilemma for that exact reason. So I can't give you the answer on what should happen. What is likely to happen is that you get drastic devaluation of bonds and the real value of holding U.S. debt. If the U.S. is able to do this in a position in a way that keeps their position, then that will be somewhat gradual over a longer period of time. And you're basically just running a financial repression regime where you've got inflation running like, pretty much higher than what the yields on bonds are paying out. And so you're devaluing the amount of debt that is out there. And that is forcing the economic pain slowly, but on bondholders out there, whether they be internal to the U.S. or external to the U.S., like the Chinese or the Japanese, who are holding massive amounts of treasuries that they've recycled these dollars into as the reserve asset of the world, which is the U.S. treasuries. So that's what I think the U.S. would like to do. Whether or not the rest of the world will let them remains to be seen, because that continues the hegemony of the U.S. as the primary economic actor and the purveyor of the economic system around the world. And there may be people around the world who are saying, well, why shouldn't it be us? Or at the very least, what's the next best thing? Well, that's a neutral reserve asset and currency. That's the role that gold played in the past, and the role that we all think that Bitcoin can play, so that we remove this issue around Triffin's dilemma by not having these weird economic incentives in place.
As Parker Lewis says, there's too much debt and not enough dollars. You've got his book Gradually Then Suddenly there behind you, Trey. And I think for anyone out there, that's looking for an introduction into some of these economic concepts and the role that Bitcoin can play, but certainly seeing that, and you're asking your question, Josh, too, of just kind of how this can play out. It might happen as we think it'll happen gradually, then suddenly, and we're approaching more of the suddenly phase. It remains to be seen how orderly that transition can be, that type of, whether it's a debt jubilee or some kind of revaluing of the bond and the debt that creditors are holding that they expect to be paid out. Well, if it's denominated in dollars and we have to do a big print coming up here to continue to provide the liquidity necessary to keep this highly leveraged system rolling, it's a game of musical chairs. There's going to be winners and losers, as you said, and that kind of transition into more orderly fashion is challenging. And so, I would also encourage people to read Economics in One Lesson. Henry Hazlitt is also a great book. And you mentioned minimum wage laws, and you mentioned some of the other red tape and bureaucracy that's in place right now that is preventing more of the free market economy to do its thing, and provide goods and services that people will value without having to get all the bureaucracy and permissions that are in place and that we know are in place in the US, but even are relatively light compared to other countries where you want to go and start a business and build. And there's really very difficult, and a lot of challenges to make that happen, particularly in countries that have broken their money, right? And countries like Argentina, where you had over 40% of people, fully living off the government support, and you end up with more taxes on an entrepreneur than you can even make in running a business. And so maybe we can take some lessons also from what Milei is doing and what Argentina's approach has been with short-term pain, but hopefully more long-term gain, where prices are actually stabilizing. And whereas I was a couple years ago in Argentina, and you can get an amazing, beautiful grass-fed steak dinner for two for like $20 or $30. You're like, this isn't fair. Like, I should be paying more for this meal, but that was the price because that was the exchange rate, for dollars. But you've seen that kind of stabilize now as they've cut the deficit, gotten into a bit of a surplus, and just take a different approach to their economy. So in the size that they have, we're obviously in the US even bigger still, but it'll be interesting to see how that plays out. And I think as much as we can have more of a free market for the building and goods and services to flow, the better off we'll be. But there's still going to be these policies, and as the tariffs, as we've shown on executive orders, it can be very herky-jerky for people to try to adjust every day or with every tweet. It's information travels so fast, and we don't know how quick these bank runs or bond runs, can happen. So keep an eye on those treasury yields. I mean, seeing that move up, curious what you guys thought with, trying to get these yields down and trying to revaluing $9 trillion in debt this year that the US has, got it under 4. And now, okay, we're back, we were 4.5. Like, that was one of the fastest, biggest moves ever for bonds.
Yeah, it certainly felt like the Chinese, the Europeans, the Japanese, whoever's holding these massive amounts of treasuries is kind of calling the administration's bluff by just selling down these assets and driving yields higher in the face of dissent and what they're trying to do to get yields lower. So, I mean, one way to get yields lower is to drive economic recession, which Trump, very well could do if these tariffs actually play out. But you never know. Like, in a recessionary environment, you expect that people are going to flee to dollars. I mean, that's what typically happens. And then you see yields driving lower. But if you get a recessionary environment and people don't want to hold dollar assets, like they're fleeing from the dollar system, then you're going to see yields higher. It's the worst of both worlds, right? You've got economic contraction, your deficits are blowing out, yields are going higher, so it makes it even harder to service that debt. It's just a massive pain trade for everybody involved. So who knows? Maybe that will play out that way.
Sounds like a good time to buy some Bitcoin. So we'll leave it there for today. Maybe actually before we finish up, Jon, if you would share with us a little bit about the run in honor of Hal Finney. Finish out by letting people know where they can keep up with you. Then Trey, if you'd hop in and plug your stuff as well.
Yeah, thanks, Josh. We had an awesome event in Hutto, Texas. just outside Austin this weekend that Trey's company Unchained was our lead sponsor for. But we got people outside running on the trail. I ran the 5K, which was super fun. And it was really a day filled with Bitcoin education. We had a solo mining BitAxe workshop that was held, a little bit of Bitcoin 101, a chat about with Jimmy Song and Harry Gray about taking personal responsibility for your health and your financials with Bitcoin, which was really great. A Bitcoin marketplace, buying coffee with Bitcoin, lemonade with Bitcoin. You're kind of living in the future when you bring different vendors and people together that are open to experiencing everything that Bitcoin has to offer. And all raising funds, in honor of Hal Finney for the ALS network. So really proud of our work in the community coming together to kick off the 2025 Run for Hal World Tour. There's going to be a run in Vegas. It won't be kind of an official timed run like we had this weekend with our partner Tejas Trails, but it'll take place during the week in Vegas. There's going to be more runs going on attached to the Bitcoin conferences in Europe. So definitely, check out the ALS network and feel free to contribute to the cause. Hal loved to run. I think 10K was his favorite distance. He loved pushing himself when he was not sitting behind his computer and coding and working on Bitcoin with Satoshi. He was outside running, enjoying nature. So that was, really, really special event, and always great to connect with Bitcoiners and people who are new to Bitcoin for the first time, as a lot of the kind of running community that saw appeal in the trails. They're saying, "Oh, what's all this?" Everyone else who ran and where the prizes got to take home these fun trophies. So, you can check out more the Bitcoin Yogi on X and Oster, or check out my website satoshihealth.com. I've got some writings and work there on how I'm helping businesses integrate a Bitcoin strategy.
Very cool. Well, for me, follow me on X at @TS_HODL. And then this, tariff and Triffin Dilemma stuff has been a hot topic. I dove deep into it in my latest newsletter post. As you mentioned, go to firebtc.substack.com to subscribe there and check out the post. So leave some comments, share it. Let me know what you think about what these different economic incentives are, and give me some feedback on how I'm presenting those ideas. And then very much related, on Wednesday, I'm going to be co-hosting with Joe Burnett an event called Doge Can't Fix the Dollar with Peter St. Onge. He's coming in to talk to people about, what's going on. It's very much related to the Triffin Dilemma. And so we'll be asking him some questions and taking some questions from the audience as well. Go to, I've shared that a little bit on my X handle. You can see that from the Unchained handle as well, at Unchained, and sign up. It's free, but should be a very interesting session as well.
Great. Well, Jon, Trey, thank you so much for your time. We'll talk soon.
All right. Thanks, guys.
Thanks.
Well, friends, it's a wrap. Thanks so much for listening to this episode of the Bitcoin Playbook. If you want to reach out to either me, Trey, or Jon, you can find those links down in the show notes. And be sure to check out Trey's recent article on the Triffin Dilemma at his Fire BTC Substack. As always, keep building, keep growing, and until next time, keep living and leading well.